Good morning, everybody. I'd like to welcome you to our webinar today on national minimum wage. So, first of all, thanks for joining us, and I hope you're going to find today's session very useful and interesting, hopefully. For those of you who don't know me, my name is Avril Craig, and I'm the payroll director here at Henderson Logie. Now, I've always worked in accountancy practice. I specialise in payroll for about 20 years. I oversee the Henderson Logie payroll service here. It consists of two areas. One is payroll outsourcing and one is payroll consultancy. Outsourcing is where we look after our clients' payroll and auto-enrollment. Consultancy is where, in various ways, we'll help and support clients who look after their own payroll. In our payroll department, we have 13 employees and we service around 500 clients. So that's just a little bit of background about myself and about our department. And I'm absolutely delighted to be presenting to you today. So let's look at what we're going to cover today. I'll look at the purpose of this webinar. I'm also going to do an overview of national minimum wage. I'll talk about the different types of worker. We'll look at how we calculate the minimum wage. What counts as pay for minimum wage? We're going to look at deductions from pay, common causes of national minimum wage underpayment. We'll look at what the employer's responsibilities are. We'll look at enforcement. Then at the end, we'll do a little wrap up. I'll answer some questions. I've already got quite a number of questions in, and I doubt I'm going to manage to cover them all today. But I'm more than happy to respond to anyone directly. After the webinar, I'll follow up with an answer to your question. So we're continuing to see an increase in HMRC's enforcement activity, and the volume of inquiries is increasing every year. So nowadays, your national minimum wage compliance is more than likely to be checked. I'm going to tell you about HMRC's current enforcement activity, and we're going to provide an overview of what's required by employers. And what I'm hoping to achieve today is just to arm you with enough information and direct you to any resources that you may require. The thing is, nobody actually intends to make an underpayment of national minimum wage. The fact is, it's so easy to do this without realising it. So I'm hoping that this overview is going to help. I could actually do a 3-hour webinar on this topic, but today should be enough to get you started and give you a good understanding of what you need. So HMRC are currently actively involved in targeting minimum wage. They've got a bigger than ever enforcement budget. I understand this is something like £27 million, and there's now 450 officers nationwide. So let's look at the nature of the current HMRC enforcement activity. They're targeting sectors at the moment, that's the motor industry and hospitality. There's also geographical targeting going on at the moment, and that's currently Cardiff, Bradford, Birmingham and Glasgow. They're doing repeat visits. So if you've been checked within the last 5 years or so, there's a good chance they'll come back and have another look. They're writing to workers directly. They're asking them questions. They're raising awareness. So, and on top of that, there's awareness being raised in the media, mainstream media, social media. And I'm actually hearing cases of them enforcing as little as 1p per hour shortfalls. So it shows you how serious and committed they are to this activity. So let's do a quick recap of the minimum wage rates. I'm sure you're all familiar with these, but in any case, so workers aged over 23, their minimum rate's £10.42. People aged 21 to 22, it's £10.18. Age 18 to 20, it's £7.49. Under 18s are £5.28. Same rate for apprentice apprentices. So about apprentices, you've got to remember that this rate applies to apprentices who are under 19, or if they're over 19 and in the first year of the apprenticeship. Once they're past the first year, once they're over 19, the usual national minimum wage rate applies. Now, there's lots of different terminology about minimum wage that you hear going around. You hear national minimum wage, you hear national living wage, you hear real living wage, and I also have heard the term the adult rate. So just a little recap of what these are and what they mean. So the national minimum wage, that rate applies to people who are over 16 and up to the age of 23. The national living wage, that's the top rate, that's the rate that applies to workers aged 23 or over. The real living wage, excuse me, this is a voluntary rate. It's proposed by the Living Wage Foundation. I'll touch on it later, but it's not fully covered here. For the purpose of this webinar, I'd like to use the term national minimum wage to cover all of the rates that HMRC set. So as part of our overview of the national minimum wage, let's look at eligibility. So who's eligible for national minimum wage? People working under a contract are known as workers, and the national minimum wage rate applies. This includes full-time, part-time and casual workers, anybody who works for you. There are special rules for agency workers. There's a few groups that are exempt, but very little. You know, one example would be under 16s. Another example is people working in the armed forces. But I think in general, you can say that practically every employee that works for you is eligible to be paid at least the national minimum wage. Let's look at the type of workers. So you now know the rates that apply and who's entitled to it. And as I said, that's practically everyone. And now I want to touch on the types of workers or category of workers, however you want to call it. So back in February 2020, the Department for Business, Energy and Industrial Strategy brought some changes to national minimum wage. Now, I don't know about you, but in February 2020 and beyond, from March onwards, we were all involved in dealing with a global pandemic. We were dealing with furlough, CGRS, business survival. And, you know, from a few weeks after February 2020 and 18 months on, we were all in survival mode, and that's what we were dealing with. So it's no wonder that a lot of people have overlooked these changes that came in February 2020. One of the changes that was brought in was categorizing workers. So these 4 categories that you see here, all of your workers will fall into one of these categories. So you've got salaried hours work, time work, output work, and unmeasured work. Now, it's important to realise that the category isn't decided by you or by the employee. It's determined by what conditions they meet, and it's determined by legislation which category that they fall into. So I'm going to look at these in turn. Let's look at salaried hour workers. They're entitled under the contract to be paid for a set number of hours a year. They're entitled to an annual salary for those basic hours. So you could say someone works £1,820 a year and their salary is £24,000. That pretty much defines a salaried worker. They're not entitled to, in their contract, to any other payment for their basic hours. They might get a bonus, they might get a premium if they work, you know, on sociable hours or something like that. But pretty much they get paid X pounds an hour or an annual salary for the set number of hours. In terms of pay reference period, they're not paid more often than weekly and not less often than monthly. Alternatively, they can be paid in monthly instalments that vary but add up to the same amount each quarter. And I think I'm referring to 4-4-5 arrangements there where someone gets paid for 4 weeks, 1 month, 4 weeks the next month, and 5 the next. So that's something that has to be really carefully monitored to make sure that the quarterly amounts equal these 3 instalments. A bit more about salaried workers. As long as the instalments remain the same, the fact that the workers actually work more hours in some weeks or months and less in others doesn't prevent them from being salaried workers. Now, the contract that you have with your employee must support this. HMRC prefer the contract to state the number of hours worked in a year, but monthly or weekly wording in the contract works as long as the employer can demonstrate how the basic hours for a year have been arrived at. So as an example, if we say 52 weeks times 7 days, well, that only comes to 364 days. So using a multiplier like 52.14 or 52.18 gives you a full year. Now, I'm not an HR or legal expert, but in my opinion, the contract would be best to express annual hours for national minimum wage purpose. This just keeps everything crystal clear. So as I mentioned, some variations in the weekly or monthly instalments are allowed, and that's compatible with salaried work. And I mentioned it's things like bonus and shift premiums. So let's move on to the next type of worker, which is time work. This is a bit more simple, a bit more straightforward. Workers must receive the minimum wage for the hours that they work, at least the minimum wage. Anybody whose pay varies depending on the number of hours they work are likely to be performing time work. So if they work 40 hours one week, 35 the next, and they get paid X pounds an hour for those hours, that makes them a timed worker. Pay for timed work for minimum wage purposes is based on the number of hours in the pay reference period. Now, some elements of pay don't count for minimum wage purposes. For example, shift premiums for overtime. The premium element can't be used to make up for underpaid hours in the same pay reference period. And a simple example of that is if you pay someone for 20 hours, let's just say they do 10 hours and they get £9 an hour, and the next 10 is £15 an hour. You can't use that over minimum wage amount for the second 10 hours to make up for the shortfall in the first. So another category is output work. It's not very common, so I'll just go over this quite briefly. If anyone needs me to go into more detail on this or any other aspect of this webinar, I'm more than happy to do that offline after the webinar. Output work is work that's paid only according to the number of things that a worker makes or tasks they perform. One example would be a bricklayer. Just say they get paid per square metre of wall built. So that would be an output worker. So that what they get paid for that work has got to be fair and reasonable. That's the terms that HMRC use. So if you say to a person, I want you to build a wall and I'll pay you so much per square metre, that's output work. But if you say to them, I want you to work 9 to 5 and build a wall and I'll pay you per square metre, that then actually falls into timed work because you're dictating the hours that you require them to do this work. The last category is unmeasured work. So this kind of scoops up everybody who doesn't fall into the first 3 categories. They might meet some of the conditions, but not all of them. And one example I can think of is a living carer. They're on duty for 24 hours, but one day they might be working for 7 hours. The next day they could be working for 18 hours, depending on the requirements. So that would likely to be an unmeasured time worker. Just on that topic, I want to make a special mention of sleep-in shifts. Really just to raise awareness for you. In the care sectors, some workers often perform sleep-in shifts. Now, in 2021, there was this Supreme Court judgment, and that ruled that workers are only eligible for minimum wage when awake for the purpose of working. So if they sleep from 11 o'clock to 7 o'clock, they're not entitled to minimum wage for that. If they have to get up during the night and work for a couple of hours, for those hours that they work, they're entitled to minimum wage. There's lots of different care scenarios. Every case is going to be different, depending on individual circumstances, including what the contract says. But again, I just want to make everyone aware that there's these different 4 categories of worker, and what you need to think about which ones your employees fall into. So let's look at calculating the minimum wage. Now, this isn't an instructional video, it's an overview. Everybody's circumstances are different, but it's going to give you the basics. So the first thing you need to do is ensure that you're paying your workers according to the type of work they are. You need to be clear on which category they fall into and that they're meeting all these conditions. Then you need to identify the particular pay period for which each worker is being paid. Remember, the pay reference period is a week, no more than a month, it could be a fortnight. You work out the average rate of pay for the pay reference period. Now, in simple terms, this is the pay divided by the hours worked. But there's things that can influence that, and I'm going to make to come on to them. Once you've done that, you can identify the rate that your workers are being paid, and then you can check that it's equal to or above the national minimum wage rate for their age. Now, this is where it gets important. You've got to think about what actually does count for pay as national minimum wage purposes. It's not automatically all the money that they've received. So here's the things you have to include. You have to include the hours for which you must pay a worker. And it depends on the type of work they've performed. If their salary, time, output, or are measured. Things that must be included: time spent at the workplace. Time spent at the workplace and being available for work. Time required to be available for work, either on standby or on call near the workplace. Unless the worker's at home on standby, that's a different scenario. You've got to remember sleeping shifts. Time spent travelling on business. Time spent training on work-related training. So the time that they spend on all these activities must be included. So it's important to you, for you, I guess, to think about your own situation and think about things like start times and finishing times. Do any of your workers start early? Do you say, oh, we're opening at 9, but I need you in at 8:45 to open the shop? We'll close at 5. I need you to stay till 5:15 and make sure you've cashed up properly. Those extra 15 minutes are working hours, and they have to be included in the calculation for national minimum wage purposes. Do you require your employees to do training as part of their job? They have to do that. They have to be paid for the hours they spend doing that. And what about travel? If they're traveling from assignment A to assignment B, the time in between those traveling to those sites, they're working and they have to be paid for that time. So you have to make sure they're paid at least the minimum wage for all of these hours. There might be other scenarios that you can think of related to your own organisation, but I mean, this is a good starting point for you to think about that. So what doesn't count as pay for minimum wage? This is what you can and cannot include in your calculation. So if they get tips or gratuities, that sort of thing, you can't include that. Overtime and shift premium, that means someone getting paid time and a half. You can't use that extra money on that hourly rate to go towards other hours that they've worked. Some allowances are okay and some aren't. It depends on if they're consolidated into the worker standard pay. And again, each circumstance is going to be different. It's all about what the contract says. Payments by an employer to reimburse expenses, you can't include that in your minimum wage calculation. Same like loans, some of them are obvious. In advance of wages, you can't include that. Rewards under staff suggestion schemes. So I think what I'm saying is think about all the pay elements and really consider, can I include this in my calculation for minimum wage? So that's payments. Let's look at deductions. Now, this is often overlooked by employers when it comes to considering, am I compliant with national minimum wage? Some deductions, but not all of them made by you from a worker's pay, or payments made by the worker can reduce the pay for minimum wage purposes. This can become a minimum wage issue when it risks reducing the worker's pay below the legal limit. An example would be if you deduct money from your employees, if you provide transport and you take money from them in order to contribute towards the transport, that counts as a deduction. So that would bring down the amount of pay that you can use in your calculation for minimum wage. Things like dress code requirements. Do you say to your employees, I want you to wear black trousers and a white t-shirt to work? If they've got to go out and buy that, that's counted as a deduction because it's a requirement by you that they have to go out and get these things. Now, that's just a brief description of some of the things. There's many others. And again, I think it's for each employer to review, if they require their employees to make deductions from pay. It's for each employer to decide, do I need to bring that into the calculation? Special mention of salary sacrifice, because this is often overlooked by employers and it's misunderstood. Salary sacrifice schemes involve a reduction in pay, not a deduction from pay. So the most common salary sacrifice schemes are pension contributions, childcare vouchers, company cars. Cycle to work's another one. Now, the post-sacrifice pay, that's the pay that's left after the sacrifice. That's the number you look at for minimum wage compliance. So if someone earns 20,000 a year and they sacrifice £2,000 into a pension scheme, their pay for minimum wage purposes is £18,000. The post-sacrifice pay cannot fall below the minimum wage rates. So employees who are apparently paid well in excess of minimum wage and with a salary sacrifice scheme, they may find that actually brings their pay down to a rate that doesn't comply with the regulations. It also means that some of your employees wouldn't be eligible to join a salary sacrifice scheme because the pension contribution or the childcare voucher or whatever brings them below the minimum wage. So again, it's another area that some employers just haven't even picked up on. Right, let's look at common areas of a national minimum wage breach. I've touched on a lot of these already, but it's just a sort of summary, just to maybe help you sort of understand the areas where it can go wrong. So, deductions from pay for items connected with the job. Now, these sentences you hear, these are HMRC's own terminology, and I've just given an example that I can think of, but you might have your own examples from your own organisation. So, uniforms. If you say to your employees, need you wear a uniform and I'm taking money off you from it, that's a deduction from pay connected to the job. Deductions from paying for the employer's own use or benefit, where the example I used was transport, where you require them to contribute towards the transport that you provide. Failure to pay for additional time added onto a worker's shift, lock-up time, cash-up time, that kind of thing. Failure to pay a worker for any time during their shift where they're at the workplace and required to be available for work. So if you've got a machine that's broken down, they still have to be paid at least minimum wage for that time. Failure to pay a worker for any travelling time, site A to site B. I know of someone who worked as a carer used to go home to home to look after the client's needs, and they never got paid for the time in between going to house 1 to house 2 to house 3. That's a national minimum wage breach. Failure to pay a worker for any time training, obviously it's job training. Failure to pay the minimum wage for apprentices when the worker isn't a genuine apprentice. Failure to distinguish correctly between the types of workers. And that was the 4 groups that we touched on earlier on. Now, salaried hours, salaried workers and excess hours. So I want to make a special mention of this because I think it's the most commonly misunderstood area. Now, excess hours worked by salaried hours workers beyond their basic set hours can cause an underpaid payment of minimum wage, typically in the last pay reference period. Now, let's say you've got a worker who's contracted to work 1,820 hours per annum, and you get to the end of February and you think, oh, they've actually already worked 1,900 hours. Then that's a minimum wage breach because they've worked more hours than they've been paid for. And then what you have to do is an exercise to make up for the hours that you haven't paid them for, and it's got to be at least at minimum wage. Quite often people who are salaried, your hours are 35 hours a week, but sometimes you'll stay late, sometimes you'll work on it, but that can all add up if someone is at or near the minimum wage. It even works for people who are just slightly over the minimum wage. Once you start adding up what hours have they actually worked versus what am I paying them for, that's, you can quite easily find that there's a minimum wage breach happening there. Now, that brings me on to what's known as the calculation year. For monthly workers, the calculation that I described earlier on of working time and national minimum wage must be performed for workers over a 12-month reference period. So this is people that are salaried. So at one point in the year, you look back and say, right, okay, let's say our calculation year ends on the 31st of March. Let's look back over the last year. How many hours have they worked? Were there any deductions? Is there any pay here that I need to discount for minimum wage purposes? So then I end up with the pay for minimum wage purposes, and then I look at the hours that they've actually worked, which means you have to have a good mechanism for recording hours actually worked. And I don't just mean their core 35 hours a week. If they've stayed behind for half an hour to finish something, if they've come in early to open up, that kind of thing, you have to have a mechanism for recording that. So you can do this calculation at the end of the calculation year and be able to satisfy yourself and HMRC if they want to have a look that your workers are paid at least at the minimum wage. Now, the default calculation year this isn't very useful, not very practical. The default calculation is the anniversary of the employee's start date, unless you've communicated an alternative to them. So, you've got people starting at different times. And in a practically it's better to have one point in the year where you do this calculation. So you can't change the calculation year. If you haven't established a calculation year, I think what you need to do is change it now. You can do this by written notice to the workers, and you need to give them 3 months' notice. So what I'd like to look at now is employers' responsibilities. I'm hoping that from what I've presented already, you can see that there's a lot more to think about than just the hourly rate. Employers need to be able to demonstrate to HMRC that in the event of an inspection, they have the records to show that they've checked and monitored their national minimum wage compliance. Now, HMRC can go back 6 years. It used to be 3 years, but now it's 6 years for current and ex-workers. So what we want to encourage employers to do is a full audit to ensure that taking all the factors into account, that they've complied with the minimum wage regulations and they can demonstrate to HMRC, if requested, that everything is in order. So enforcement, what HMRC can do if they find a problem. So as I mentioned, they're targeting various sectors and areas, and they're set to continue that. So at the moment, it's Birmingham, Cardiff, Glasgow, Bradford, I think. Then they'll move on, they'll move to another area. And what they tend to be doing is writing to employers. This isn't exactly the case for everyone, but they're sending out what you might call nudge letters to say, is everything, your record's okay? Just we encourage you to have a look and make sure they're okay. They're also speaking directly to employers too. They can interview employees, and they can interview employees directly. They can write to them directly. As I said, they're making more awareness through media. So in terms of enforcement, employers that pay workers less than minimum wage, they must pay arrears of the wages to the worker. And it's got to be at the current rate. If it was 2 years ago, you found something wrong, you don't pay it at the rate 2 years ago, you pay it at today's minimum wage. The financial penalties can become astronomical for underpayment, failure to maintain adequate records, tax fines, and they do the whole name and shame thing in the press, which you've probably already seen with other organisations. So I'd like to encourage you to take action now and prepare yourself ahead of HMRC contact. What I will say is, if you do get one of these, what I call nudge letters, and you act on it, and you find that there's an underpayment somewhere, and you rectify it, they're happy with that. They won't be fined. There'll be no action taken. So this is kind of almost like an amnesty. So I'm trying to get ahead. I'm trying to get to people ahead of them even receiving the nudge letters. This is what today's message is about. Just please take time to look back and do a review of everything that you've paid. So here we are at the wrap-up stage. I really want to thank you for listening. I'm hoping that from today's webinar, it's going to help to make you think about what you need to do as an organisation. It might be nothing, it might be a look-back exercise, but I'm hoping that I've armed you with enough information to know what you need to do. Now, there is really, really full guidance on HMRC's website. I've included the link there. We're going to send a recording of the webinar out, and I'll also send on the link for you as well. As I said, I've got lots of questions. I can't cover them all because I've actually overrun a little bit. I'm going to cover, I've got 4 questions here I'm going to cover. They've been asked more than once, so I'll cover these ones. But please do feel free to contact me directly if you have a question, even if you think of it later on. Please feel free to contact me directly. I'll put my contact details up here, and my operation manager as well. I'd also like to say, if there's any topics that you think you would like us to cover in the webinar, please drop me a line and let me know, and I'll see what I can do. So here's some of the questions I've got. I've been asked, I'd like advice on changing a pay period for a small group. So changing, I think what you mean there is changing from weekly pay to monthly pay or something like that. So it depends on the situation. What you would have to do is get involved in a consultation with your employees. It's got to be at least a 30-day consultation. If you're going from weekly pay to monthly pay, you might have to think about bridging loans to get them used to the new pay period. As I say, it depends on your organisation and your situation. So I'm happy to take this offline and discuss further. Now, I've been asked by a couple of people about what's the real living wage. And again, I think that ties into confusion with all the terminology that we saw. So the real living wage is a voluntary rate that employers or organisations sign up to. At the moment, it's £12 in the UK. For the London weighted rate is £13.15, I believe. So you can apply to the Living Wage Foundation for accreditation to being a real living wage employer. It's kind of gives you a bit of kudos and a bit of credibility. You can apply to the Real Living Wage organisation to get accreditation, and you get it's like a seal of approval to say that this organisation is a real living wage employer. I've been asked also, what is the latest date for actioning national minimum wage? I think so. To apply the national minimum wage, the rates change on the 1st of April. So they have to apply from the first pay reference period that starts after the 1st of April. So if you pay your employees from, say, the 15th of March to the 15th of April, the national minimum wage rates apply from the 16th of April. It's the first pay reference period after the 1st of April. But if what you mean by your question is what's the latest date for looking at compliance, well, you need to look back 6 years and you need to be monitoring this all the time or once a year, depending on what type of workers you have. You need to be aware of what is and isn't pay for national minimum wage purposes. What the deductions are, is someone working more hours than is in the contract? How do we monitor this? So find a way of getting that implemented for your organisation. Do a look back exercise. Look at it going forward, and then you've got peace of mind. So if HMRC turn up, because that's the thing, if they turn up and say, right, how do you ensure that you've complied? And you just go, yeah, well, I think we're okay. As opposed to, well, here are my records. This is how we'll monitor it. That's going to be a much easier visit from HMRC for you. Right. Another question I've got is, does my payroll provider not take care of all this for me? Well, the answer to that's partly because your payroll provider, whether it's us or someone else, they're going to know your employees' pay rates, or annual salary, they're going to know their contracted hours, they're going to know if they're in salary sacrifice. So from there, they can tell if someone is above or below the minimum wage. But what they don't know the actual hours that the person works. They might be contracted to work 35 hours, but they're doing an extra 30 minutes a day. There might be deductions that do you require them to buy certain clothing for the uniform. They don't know if your contracts support the type of worker that they actually are, they actually fall into from the legislation. So the answer is they'll know partly, and it does fall on employers to have a system to monitor national minimum wage compliance. Okay, so I think that's all of the questions that I've got time to cover today. As I said, if you've got further questions on any of the webinar, if you've got a particular national minimum wage question you want to raise, please feel free to contact me and I'll get back to you as soon as I can. So thank you so much for your time today. I hope this has been helpful to you. I'm hoping it sets you off on your journey of making sure that you're compliant for national minimum wage and prepared for any HMRC visit to your premises. Hope you all have a lovely day. Thank you very much. Bye.